Yo guys, welcome to the new video. In this video, I will talk about the different type of liquidities, mainly very important liquidities in the forex market. Because if you watch my YouTube channel, I talk about a lot of liquidity concepts, and I have so much experience in the liquidity side of things in the forex market. Because you don't see this kind of stuff I'm showing in the anywhere in the YouTube, because you can only find the retail concepts and smart money concepts. The stuff I am showing you guys here is the stuff what 1% traders will do. Means we are identifying where the majority of the ships are trading. We know exactly where many people get trapped, like these areas. When the liquidity is taken, we enter the trade. So in this video, I want to talk about the different types of liquidities, and I also tell about how to identify the liquidities correctly and accurately. See guys, my strategy have 70 to 80% accuracy. 70 to 80% accuracy in trading means very huge. So let's dive into the video. So when coming to the different types of the important liquidities, we have first one, previous days highs and lows. So previous days highs and lows is nothing but you should use a session break indicator like this. In the settings, it will be the settings, there is a session break indicator. You should go to events, and this is session break. You should on, so that what session breaks will do is it will exactly show us the day's starting point and the day's ending point. By this you can easily identify the high and lows of the days. By this you can easily identify the high and lows of the days. So after taking the highs and lows of the day, there is a very high probability of the price to reverse from that area. Because how I know, the data shows everything we do in the trading is based on the data. That's what separates us from the amateur trader and the newbie traders from the professional traders. So we should always take the decisions based on the data. So this is the edge I use based on the data with certain entry patterns. You can use your own entry patterns, because there is no specific entry pattern that market always follow after take the liquidity. Because there is numerous things happen after the liquidity is taken. Sometimes after the liquidity is taken, it can be straight liquidity push and then reversal. Sometimes it can go like this, and break of the structure, mitigation, and this happens. So we can't exactly tell what the market will do after the liquidity is taken, but we can tell that after the liquidity is taken, there is very high probability of the chance that market will reverse. But the entry pattern is different for all kinds of liquidity sweeps. So you should develop your own entry pattern after the liquidity is taken. You should develop your own entry pattern, because the entry pattern will be always different. As I told you, after the liquidity is taken, the entry pattern will be always different as compared to the another one. So what are the another liquidities? Previous day highs and lows. Okay. How to mark the previous day's highs and lows? In this question, I have told you how to on the session breaks. After on the session breaks, you should just mark the liquidities. Liquidities means you should just identify the day's highs and lows. What's this day's high? This is the day's high. What's this day's low? This is the day's low. This is the day's low. And you should mark all these liquidities. All these liquidities. Again. So why we mark these levels? Because these are the one of the very important liquidity levels. These are one of the very important liquidity levels. So that's why we marked them. If you see here, maximum times the price took this liquidities, you can see a nice push. Here I am here to teach you the concepts of liquidity. I can't teach the entry pattern here, because you can establish and build your own entry pattern according to the data you collect from your backtesting session. I am here to just show you the concept how the market moves in the bird's eye view. Okay, the entry pattern you can use whatever entry pattern you can use. See, after the high is taken, you can see the push. Again, after the low is taken, you can take a pullback trade here. Again, after the previous internal liquidity is taken, you can see the push. You can ask a doubt here, why can't you take a sell when the liquidity is taken? Because here simply my entry pattern has not arrived, so I am not in this trade. You should be very disciplined in the trading. Discipline is the most important skill in the trading. So here after the liquidity is taken, I am not in this buy too because there is no entry pattern formed according to my checklist. So I am not in this buys. Even though liquidity is taken, I am not in this space. Every time the market moves from the liquidity point to the liquidity point, the only thing is you cannot take all the moves. If a guy or a mentor is taking, you can take 5 to 10 trades a day. It means he is scamming you. There is nothing in the trading like you should take 5 to 10 trades in a day. I usually take 2 to 3 high probability trades like this trade. One shot, one kill. I usually take like this, and my win rate is around 50 to 70%. There are some Instagram guys who are telling that I have win rate of over 100% and 99%. Those are bullshit guys. Never trust them. Those are the guys who don't nothing about the market. They don't know nothing about the market, how the market works. The every move in the market is subjective. Remember this point. The every move in the market is subjective. But if anything is working for us, we should only update it. Like it should be innovation loop. I will explain you here. Innovate, test, feedback, update. So in order to become a very professional and profitable trader, this is your path. You should innovate your entry pattern after the liquidity sweep is happened. For example, let's say your entry pattern is this AMD cycle, break of the structure. After the liquidity sweep here and here and here, you are looking for this setup. Let's say you got 3 winners out of 10 trades. It means, and you got your data, you should take screenshot of the every entry pattern and you can know what's winning and what's not or winning. So you can innovate and test and get feedback from your data, and you should update the strategy. The constant innovation is very good in the trading because the win rate will be more and you can adapt to the current market conditions, because not every time the market conditions will be not same. It can change from years to years, because in the last year or before last year the market conditions are different. Now the market conditions are different. So in order to adapt to the every kind of market condition, this is the only strategy you should use. You should innovate, test, feedback, update. I'm not telling you should completely change your strategy. It's just some entry patterns or adding some timing stuff to that. Small little bit changes you can update to the current style of the market. So next thing, previous days internal liquidity. So as I told you, each day high and low are previous days liquidity. So what's about the previous day internal liquidities? If there is a high, if there is a high that is in between the previous day high and low, it is called previous days internal liquidity. Usually previous days internal liquidity I use red color because this high is in between previous day high and previous day low. So this is the previous days internal liquidity. If you see the speed and aggression bulk candles taking this liquidity, if you ask why, it's about the retailers, to attract the retail newbie traders. Because if you watch on any Instagram or something, newbie traders are shown this stuff, retail build up stuff, equal highs, break of the structure, they should buy. They will show complete opposite what the market does. If you see the body closer is there, and the retail newbies will think it's a strong break of the structure and they should buy, and they will buy here. How they will do is, I exactly know how the retail newbies will think. They will buy here and their stop losses will be here and the target will be here. They even trade with the negative RR. So they hit the stop losses and the our take profit will hit. This is where we can enter, because there is no entry button for me, that's why I not enter. You can enter if you are aggressive, you can enter and your target will be here. This is how I trade the market, from the liquidity point to the liquidity point, with mindfulness, with the edge. I don't trade at every liquidity point. If the liquidity is taken according to my criteria, then I will trade. Some people in the Instagram will tell you, if you understand the liquidity concept, you can take every trade in the market, but it's completely scam. You should be aware of it. You should be aware of it completely. I am showing you the real stuff, what you should need to be profitable in the market. This is the loop you should need. Innovate, test, feedback, update. This is the loop you should need. And another thing, Asian high and Asian low. I think you have heard about the daily cycle. If you not watched my daily cycle video, you can watch it. The first thing is build up. Asia session is usually build up of the liquidity. Asia session is usually build up of the liquidity. So the nature of the Asian market is it will induce the liquidity on the both side of the markets. Means if the Asian high is taken out, we should target the Asian lows. Same thing. You should develop a entry pattern as I told you, and if the entry pattern there is, you can sell, and if the entry pattern there, you can buy. You can ping pong the trade from the Asian session, because it is also one of the important liquidities, because the data speaks. You can use it. You can use it for 2 months or 3 months. You can know for majority of the time when the Asian high or low is taken out, there will be a complete reversal, because the data is there. Every trade you took is based on your data and your age. So London low and NY low. So I want to combine these three: Asian low, London low, and NY low, because these are the sessions. Every session is a liquidity. Every session high and low is a liquidity. I will explain. I will show you the real charts. If you see here, this high is acting as a New York high plus daily liquidity. So when the New York high is taken out in the New York session, it's very high probable you can catch this move. When the session money is taken at the same time on the another session, it's very high probable. For example, let's say there is a London high. Let's say on when coming into the next day, fresh day of new session break, when the London high is taken out the London timing, when the London high is taken out at the London time, let's say it's not the high of the day, it's the middle range. If the London high is taken out at the London time zone, London session, let's say this is the London session, then it's a very high probable trade, because the money transfers happens at the time. If the high is taken out at the London, then it's very high probable trade. And same thing today happened. What happened previous days? Liquidity is taken into the edge order block. Same thing. Sell. Another build up. Liquidity is taken. Sell happened. If you are a very conservative trader, you can target this. You can just call. It will give you 1:5 or something. You can do it. There's nothing wrong in taking 1:6 or 1:10. If you see in this trade, this is my entry pattern here. Speed and aggression taking out the liquidity, and at the opposite candle I will enter. Same thing here, speed and aggression. These are the moves you will take if you understand the concept mindfully. But if you just understand the concept and you don't have mind of the markets, you can't trade. And what's the next thing? News highs and news lows. What's the news highs and news lows? The only times you should see the news highs and news lows is first is the FOMC, and then second is NFP, third is CPI, fourth is PMI. These are the only 4 red flag news you should mark the highs and lows, because let's say this is one day. In this day there is a news. This is a huge news spike. On the another day, let's say this news is taken, news candle is taken, then there is a huge possibility that the market will reverse, because it was used as a liquidity to induce the traders. It is used as a liquidity to induce the traders, so we can sell from there. And the last but not least, my favorite setup. Nowadays it will become my favorite because there is very high probability build up highs and lows. What it means is, I think the chart is become messy. I don't teach as clean as some brokey guys teach retail concepts as clean with visuals and stuff. Because if any guy wanna truly wanna profitable in the markets, they don't care about the visuals. They just can see this type of shitty charts and gain real knowledge in the market. So in this case, what's the build-up is? First kind of build-up I use is channel, rising channel. Second type of the build-up I use is falling channel. Third type of the build-up I use is equal stacking lows. These are the three build-ups I use for the retail build-ups, and for the SMC build-up I use this pattern. Fake break of the structure. This is my liquidity. Okay, so what I will do when this channel high is taken out, and one more important thing, these channels it should happen in the 4-hour or daily time frame. When the high is taken out, I look for the sells. When the low is taken out, I look for the buys. When the low is taken out, I look for the buy. Same thing for this case. When the high is taken out, I will sell the market instantly. I will sell when the opposite color candle form. Instantly I will sell the market. This is how I view the retail build-ups in the markets. This is how I view the retail build-ups in the marketplace. Same thing. So yeah, we have completed all the different type of important liquidities. So the thing I will ask you to do is you just prepare a clean checklist of your entry type of the liquidity, because many people know about the liquidity concepts, but they are not profitable in the market because they lack the mindset. Simply to tell, they lack the mindset, because the strategy is just 15 to 20%. The 80% is mindset. So I have a entry pattern, specific entry pattern. I don't tell my entry pattern is only profitable in the market. There are many edges out there you can use. But if you want to learn my entry pattern, just I left my WhatsApp number in the description. You can just text me. I will add you in the bootcamp, because I am running the bootcamp current now for the July members. Currently, 3 spots left. You can join. I will exactly show you the pathway of the least resistance for the profitability in the trading, because I know guys who are trading for the 5 years, 6 years still not profitable because they just change from the strategy to the strategy. But in my case, what I will teach you is I will teach you exactly the objective nature in the market, objective nature of the strategy. It means because every move in the market is subjective, because you can't decide. There is no specific pattern for the market. It will move whatever it like. It will move whatever it wants. So how we can profitable in the markets? Through the data. When the data tells us this setup is happening one thing over other, this type of setup is happening 50% win rate, so we can get money off it, because the data is telling us. So my setup has data, proven data. My strategy has proven data. So it will fast forward your journey, because I know some guys who joined 6 months from the trading, and he's doing awesome with the profits. So hope you enjoyed the videos. On the next video, so what I should do, you just comment down. I will do that video, because many people are asking about the mindset things in the market. You can just ask. Okay guys, hope you enjoyed the videos. I left my WhatsApp number in the description. Just follow if you wanna join the course. Peace guys, thank you.